David Morgan with the Weekly Perspective. Right now we are post-Trump on the election, and Jim Rickards particularly and a couple of others were talking about the mismatch in the markets, and if Trump were elected, we would see a huge move in the gold price and a decline in the stock indexes, S&P or DJI, take your pick. Absolutely correct, but for a very, very short time. In fact, if you were on board that trade and didn't have an overnight trading account, the likelihood of exiting with a profit were probably pretty slim. But regardless, after that quick move, very high in gold and very off in the Dow, off about 800, 850, the markets rebounded and resettled, and basically it was a non-event. So certainly it was a spike. It did take place. Well, let's move on. Right now, the gold price is at about a 5-month low, and the U.S. dollar is a 13-year high. The main thing that has kept us steadfast as far as intermediate-term moves has been the Commitment of Traders report, which we report on fairly regularly for our website members. I just did that for our members, and what I saw was definitely a big change in the commercial side of the Commitment of Traders in both gold and silver. Also, the bond market is something that I've harped on probably not long enough, but the decline in the bond market is substantial. Basically, at this point in time, we see a great deal of nation states that basically are not only exiting the U.S. debt markets, but not buying nearly as much as they were in the past. So the Federal Reserve has become the buyer of last resort. Many are anticipating that the Fed will raise rates in December. It's almost guaranteed. Why? The Fed actually follows. It doesn't lead. Yes, it does lead in some cases, but most of the time it actually follows. The bond market has fallen off so sharply and in such a direct manner, meaning so quickly, that it is already priced in at least a quarter-point move up. And the Fed's basically following what the market is already dictating. For years and years and years, I asked myself and others that are in my peer group, where are the bond vigilantes? Well, I think they've returned. They may not have returned in the bond pits of the United States, but certainly in the overseas markets. Many, many do not trust the status of the United States dollar long term, which means they do trust it short term. Again, repeating, the dollar's at a 13-year high, but they're really the same instrument. It's a U.S. dollar today or a U.S. dollar tomorrow. If you don't trust it tomorrow, why do you trust it today? This is what a currency crisis is all about. We'll be reporting on that as we go forward with the Morgan Report. Stay tuned. I will be back with you every week that's possible.